Next, we go to Standard Bank, the big blue, largest by assets, I think. I'm not quite sure whether that's true anymore. It's got a 20% holding from China's ICBC. Remember, they came in about 6 or 7 years ago, bought a 20% stake, put some extra cash in. So they've got a non-controlling parent sort of body, I guess you could say, in the form of that ICBC holding. Not a controlling stake, but a blocking stake, perhaps. And over time, they have exited some international markets and typically sold those operations to ICBC. So you can see the nature of that interaction. Market capitalization, 180.9 billion rand. Price earnings ratio, 9.23. Dividend yield of 5.74. So that's what you're saying, Rowan. These guys are a little bit less highly rated by the market in this current environment than FNB.
Yes, and it's driven really by the return on equity, and they actually, Standard Bank, given some of the legacy issues they've had, have the lowest in class in terms of the top 5. So I guess if you're an optimist, you say they've got a lot of room for improvement, and there's a lot of sort of potential value there. I guess the question is, will they be able to unlock that? They have restructured quite significantly, and you look at their sort of earnings and the earnings base, there's been a lot of changes. They've decreased and effectively, I guess, deconsolidated that Standard Bank PLC by selling it to their 20% shareholder,
That's
ICBC.
Probably going to be net positive, because those were business units that weren't always very reliable in terms of earnings.
Absolutely, yeah. I think they sort of struggled to manage that. They had that issue a little while ago with the bonded warehouses with the aluminium in China. More recently, they were fined also in the UK due to some underhand dealings relating to a Tanzanian government bond issue and inducements that were paid. They admitted to themselves and agreed a fine.
That's awkward. Speaking of those African business units outside of South Africa, they put quite a lot of capital and effort into Nigeria, into Angola, and a number of other countries. And at first, it looked like they were making the right investments for a growth trajectory. Now, I guess, having capitalized a bank, not just a corresponding office in Angola, it looks like a poor decision in hindsight.
Yes, I think it's sort of been quite a turnaround. Obviously, the significant decline in the oil price is impacting the West African region and the Angolan market significantly. I think East Africa is a lot more defensive, so it depends where you are. But net, it's actually a negative, and that, I think, is one of the things that's weighing down on the share price.
For the moment, anyway. Okay, let's have a look at the share price, because it looks the same, but you can see a deeper fall, which tells a slightly nuanced story. A little bit of a recovery at the end there, but currently battling a little bit. Standard Bank also has some technology challenges. I noticed they took down their entire system infrastructure for a whole Sunday recently, which is a sign of a bank that's kind of having to do some emergency and deep level changes in its technology infrastructure.
Yeah, they have been making significant investments there. I think they are a bit behind the other banks in terms of, yes, the sort of up the relevancy of their technology. So, and that's going to be a drag, I guess, in terms of continued investment. And the new retail banking customer, I think, is looking for the latest technology. So it is a factor.
Hot or not on Standard Bank?
Given also their resource exposure and Africa exposure, which we touched on, not hot.
Yeah, so in the context of a rather sort of murky global environment where people are not really necessarily loving banks too much, perhaps this one has got more to prove and one ought to lean not hot. Okay, I agree.